Well, hello everyone. I'm delighted to be joined here by Ted Franks, who is a fund manager and partner at WHEB Asset Management based in London. As you may know, WHEB is a specialist fund manager that invests in companies that engage in activities around the sustainability thing and the sustainability challenge. We're recording this evening New Zealand, early morning, so thank you, Ted, for getting up early and doing the presentation.
No problem.
In London time. We're going to run this session as a Q&A session, so I've got a number of questions lined up, and hopefully what we'll do is we'll I guess, elicit some good information, not only about sustainability challenge and themes, but also around WHEB's approach to investing. Maybe just to kick off with, Ted, if you could just make a few comments and tell us a little bit more around WHEB.
Okay, great. Yeah, thanks, Matt, and thanks for making this possible. So WHEB has this core mission, which is to advance sustainability and create prosperity through positive impact investments. So we're this single strategy focused. It's a long-only equity strategy. It's all about sustainability, and as I'll describe in a bit more detail, it's really all about the impact end of that, the really most kind of the deepest green part of sustainability. But this is all we do, and although it's become a very popular area quite recently, we've actually been doing this inside WHEB since 2009, and the strategy itself has been going since 2006. So we've seen a few cycles of this. And on top of that, I think it's worth saying, we're very pleased to say we're 1.25 billion sterling under management now in the single strategy. So we're no longer the small thing we used to be, but we're also remain very dedicated to running things the right way. And we've got a couple of sort of core principles about WHEB. We're a B corporation, for those who know what that is. That means that we take account of all of our stakeholders rather than just the shareholders in the business itself. And we're very keen on radical transparency. We like everyone to know exactly how we're investing and why. And I guess we like to think of ourselves as, part of the solution to some of the big challenges that the world faces in terms of sustainability.
And so how do you see the sustainability challenge, and how does that translate into investment opportunities?
Yeah, so I mean, I guess now it's obviously, particularly latterly, and it's fantastic. 2020 was this great year of these net zero carbon commitments. A lot of people are thinking about sustainability, but so there's nothing particularly sort of I would say new or dramatic about the way we think about these things. But this slide here, just going to share with you, hopefully, sums up the kind of core thinking about the way that WHEB thinks about it. So we see and have seen for a couple of decades that really to get to the point where the world is genuinely sustainable, and that's not just solving climate change, that's moving to a point in which our use of global resources is in balance, and that future generations can live the same standard of life that we would, and space for everybody on the planet, all these huge challenges. But that's very profound and will require a whole new industrial revolution. And this schematic was put together by an economist called Carlota Perez back at the start of the millennium. And it really does sum it up very well. We've had these 5 big industrial revolutions so far. The 5th of those, the IT revolution, is still really ongoing. But now what comes as the challenge for the next few decades is to really stop doing some negative things and do lots more of the positive things and try to find a balance. And really, there's a few ways you can invest around that. You can either, disinvest or short the bad stuff. Broadly speaking, you can, have strategies around the demise of the sort of fossil fuel complex. The big thing that a lot of people do, which is we would think of as ESG investing, is invest in the companies that are best placed to make the transition no matter what they do. But for us, really, the focus is on what we call impact investing. And that's in the companies that provide the products and services which are going to solve this sort of challenge. And I've just flipped forward one slide, try not to be too slide heavy, but this kind of sums it up. Over on the right-hand side, the companies we invest in, Aptiv making components for electric vehicles, Arcadis, consulting engineer, everything they do is around climate adaptation, TPI Composites making the blades for wind turbines. That's where we see the opportunity in this big sustainability industrial revolution.
So one of the themes of our investment presentation today is around the raging 20s, or the roaring 20s, but we've entitled it the raging 20s. And it's how I guess, investment themes develop over the next decade or so. So if you look forward, let's say if you use your crystal ball and look forward a decade, how do you think the world is going to be coping with climate change and the broader sustainability challenge given the world's limited resources?
Yeah, well, it's a fantastic and obviously critical question. And my answer to it would have been quite different in 2019 as it is in 2021, because although these are symbolic political commitments, we've seen nothing like them in our career of doing sustainability investing. And now there is this real political will to solve these challenges. But if I look forward, I would say in a decade, we will be doing much better. We will still be a long way from solving, but I am an optimist. And fundamentally, if you invest with us, you sort of need to be a technological optimist that humanity can solve these problems, can find a way to do it. I think over the next decade, I would say, if you think of the pie chart of where the big emissions come from, the big two, the first one, sort of 25% coming out of energy generation, 10 or 15% coming out of transport, or, these numbers, different people have different numbers for them. But energy and transport, we have a technological pathway now. We have renewable energy, it's become very cheap. We can talk about electric vehicles. So I think we'll see good progress on that side. When you get into the nubblier bits of carbon usage, and these are things like buildings, aviation, food in particular is a big challenge for us. It will become apparent that we've still got an awfully long way to go. And the companies we invest in already have solutions to try and help us through with that. And then, to be honest, there's a whole raft of other sustainability issues, such as circularity, reducing the use of plastics, and the many social issues that we need to address, which will probably still have a decent runway to go. So I would say 2030, things will look better. I think, I'm not going to reveal my age, but I think I've got a good couple more decades doing this. By 2040, by the time I might be thinking about slowing down, I'll be really interested. I hope by then we've got really much further down the track.
Great, no, thank you. So just coming back to WHEB and WHEB's approach to investing, can you just sort of give it a bit of flavour around, well, what WHEB's approach to investing is, what you're trying to achieve, and perhaps a little taste of what the portfolios look like, what the portfolio looks like?
Absolutely. So what are we trying to achieve? So WHEB is fundamentally trying to achieve two things. It's trying to produce a superior alternative to global equity investing and to show that we can outperform through sustainability, at the same time as being truly authentic. And actually this point about being impactful. So people who invest with us, some do it purely for the investment opportunity, but if you are keen that you should know that your capital is doing something impactful, we want to help you understand why it is. So we have these sort of twin goals. Let's outperform at the same time as being as authentic as possible. And so we put a decent amount of work in trying to make sure that we really understand that the company is authentically providing a sustainability solution, and that's giving it superior growth opportunity. And then we try and find the companies which we think are best positioned. Now, there's a couple of important points to understand about that. I guess the first is to say, so we're always looking for companies where the equity story is the sustainability story. We want those companies where the management's talking about the sustainability challenge and solving it. The second point is to say, we think you have to be pretty long-term to do it. I think we don't think you can treat a company as a dot on a computer game screen. We think in system terms. We try and be a participant in capital markets to solve these issues. And the last point, which relates to that, is we do try and engage with our companies. And we try and help them along the journey as well. So that's kind of the overarching philosophy of it. Just a little bit, and there's plenty more time if people would like to hear more about our process. But in terms of the process, what we then tend to look there for is high quality companies, pure play providing these solutions, and at an interesting point of their growth where they're about to inflect and their solution is going to really become a big thing globally and solve a lot of the challenges at the same time. So we tend to go for higher quality sort of mid-cap companies providing these solutions. And the other just thought I will quickly share with you for another quick share theme is, and I apologize because this will flash up and it'll seem very detailed, and we're obviously delighted to help anybody who wants to have a more detailed conversation with us. But how do we do it? Here's a sort of view. We have these 9 sustainability themes we invest in. Some of them are social, some of them are environmental. So starting in the middle, social, environmental, and then you spread out. And if you go around the edge, and I appreciate you won't have time to read all of this in a hurry, but these are the different thematic areas where we think there's a sustainability challenge, we think there's a good solution, and we think there's a good equity attacking that solution. And that's kind of how we think about putting the portfolio together. tons and tons of information there. I'm sorry, but hopefully that's useful for you watchers.
Thanks very much. And typically, when you look at the portfolio, sort of how many positions do you hold? Is it how geographically spread? Is it just sort of a flavour of what?
Yeah, absolutely. So we're going for 40 to 60 positions, currently 45, and to be honest, certainly at the sort of lower spread of that range, certainly sub 50. We are authentic pure play companies, which tends to put you into the mid cap space, but we don't do particularly high technology risk. We like to have companies that have at least demonstrated some level of profitability. So we're kind of getting them at a very particular point. So it's not the highly speculative growth companies, nor is it the sort of fully established ones. It's the ones that are in the growth phase that we're really going for. We're a global portfolio, deliberately so, and sort of match global equity exposure generally, which also kind of matches our universe. And I mean, what else to say? You know, the points I made earlier, this preponderance of higher quality franchises and good cash flow return on invested capital. Not to throw too much jargon at you, but sort of trying to find the high quality business models. That's what we do.
And have you got maybe a couple of quick examples of companies that are currently within the portfolio?
Yeah, sure. So I've got a couple more slides for this as well. So I'll just give you a little taster of them. So as you might expect, the renewable energy complex is important to us, but actually it's not as big as you might think because we haven't got so many high quality business models in there. It's about 5% of the portfolio. So one of the companies we invest in, I mentioned before, TPI Composites. We also invest in Vestas. These guys are helping drive the cost of wind energy down. That's the blue line there. TPI Composites in particular is doing it by helping the blades become longer and longer, which increases efficiency. So that's one sort of example. Then we've got quite a lot of exposure to the EV transition. Some names here, Hella, Infineon, and Aptiv, they're in the portfolio. You can see the green bar at the bottom, the growth rate for people buying electric vehicles is increasing quite dramatically. So sort of, you know, in terms of our portfolio, we like this opportunity. We have done since 2017, 2018. We've got about 12% of the portfolio exposed there. But we do obviously like to get into all kinds of different angles of climate change. And here's another good example. DSM, Dutch specialty chemicals company. As I mentioned, decarbonizing food is a huge issue. And in fact, actually, maybe for a New Zealand audience, I hadn't thought, but this is probably quite a good slide. So reducing the methane production from cows, they have this additive called BOVA. It reduces methane production in cows' stomachs. They've got a number of other really interesting sustainability breakthrough products as well. And we've been backing them for a good few years now as well. So that's a taste of some of the sort of companies that we invest in.
Thank you. Just moving on, one or two other questions before we finish up. Impact and measurement of impact on the investments that you make is obviously an important integral part of what you do. Could you maybe just talk a little bit more about why you think impact is important and then how you measure it?
Yeah, so this is obviously a really big and still evolving question, and there are big philosophical debates about what an investor can claim, what impact an investor can claim they're having, and we do try to be very careful at not over-claiming and trying not to sort of pretend that it's the investor that's ultimately doing this, because really it's the individuals and the entrepreneurs that make the solutions happen. But that said, we are definitely trying to be as transparent to you guys, our investors, as possible, to try and show you where those connections could be. And really, there's a couple of things about it. First of all, it helps you as investors to understand why you're having a positive impact and potentially quantify that. But from the investment team's point of view, it's very important as well, because the idea is that the opportunity set, the very large opportunity sets to make a big difference in the world, if you can attack those with a company which has got good barriers to entry and a good kind of, you know, IP position and a real market leading spot, then you should hopefully have a better opportunity. So we do quite a lot of work trying to get our heads around this, not just from the point of view of communicating externally, but also from the point of view of investing. And again, sorry to be, I don't want to be too slide heavy, but I've got a couple of little slides on this. So the first one is this, which is to say, and again, caveat that we try to be very careful about making too many claims, but we've for a long time now, you know, for more than 5 years, we've tried to gather the data where we can reasonably say there's a relatively clear case for it in terms of how our companies are changing the world, impacting it in a positive way, and giving some sort of frame about how positive that would be. And this is our impact calculator, which you can access on the websites, and advisors can help use this with their clients. But that sort of quantitative aspect, in many ways, doesn't really capture the complexity of it. So without wanting to go into too much detail, we do also have a qualitative approach. We have something called the impact engine. And what we're trying to do with the impact engine is derive a sort of sense of just relatively how impactful the companies we invest are. And we show every year in our impact report what we think the answer to that question is. And that's this impact map with the dots scattered on it. And in general, if you can see, the x-axis is how positively impactful the company is, and the y-axis is how high quality we think the company is. We are obviously trying to find the companies up in the top right corner of this, where we can really communicate to people, say, look, this is a special company. It's kind of unique. It's going to do something really dramatically positive. And of course, as I mentioned, that hopefully should help it outperform as well. So again, complicated answers, but there's a lot of thought that goes into this, and this is really part of what WHEB's all about.
Great, thanks. Maybe just a final question. We've obviously identified there's a lot of opportunity in investing in this sustainability area, but I guess with it comes risks. And I don't know if you could maybe just briefly sort of give some thoughts on what the risks look like and maybe how you deal with them.
Yeah, absolutely. So there's a few, with everything, there's always sort of risks to think about. I mean, the fundamentals are that because we're investing in companies the world needs more of, kind of on a very core level, we consider that to be somewhat de-risked. Okay, there's a question there. We're not trying to take any particularly contrarian bets, so that sort of helps a little bit. But of course, even within that, these are still evolving sectors, so there is clearly a risk of disruption. There are lots of people looking to solve these challenges, particularly now. There's been a lot of capital flowing in, so there's clearly a risk about getting the wrong name, and particularly with the way that we invest, trying to be a bit more careful around valuation and quality and the stability of a company. There is always a chance that some very disruptive tech-enabled solution will come up, which would be terribly exciting. Of course, we'd try and get into investing that if we thought it made sense as well, but that's kind of a clear risk. Another risk is the valuations. I mentioned the capital flowing into the sector, and there has been a lot of that. We've always been a growth at a reasonable price strategy. Certainly, if you look out across the ESG market as we do, we see ourselves, compared to some of the other strategies, as more value aware. But that's a particularly big question now. And as we speak at the start of 2021, there are thoughts about inflation that feeds into valuations as well. So that's another risk. And then lastly, not to sort of go overboard the risks, those are sort of absolute risks to a certain extent, but there's a sort of relative risk too. And that is to say that we don't invest in consumer technology. We don't think it provides a solution to a sustainable challenge. And in fact, in many ways sort of creates further sustainability challenges, but it has been an area of huge equity growth over the last decade. We think the next few decades belong to sustainability, but that's certainly, if you look at global equity markets, you look at the big FANG mega cap tech stocks, we're not invested there too. So it depends on how your frame about relative risk is.
Okay,
so is that
that's
helpful?
great. Yeah, no, that's really good. So we've just about finished. I don't know if you had any final thoughts or comments, you wanted to make, maybe just more generally around what you do and the opportunities ahead.
Well, no, you've covered a lot of key areas, but I guess the obvious thing, in case it wasn't clear enough, the strategy's been going for 15 years, and we've had to be consistently trimming our sails for a skeptical market environment. And in 2019 and then in 2020, the frame of it changed, not just politically at the top, but also with individuals experiencing the lockdown. Of course, speaking to New Zealanders who didn't experience it, so good for you, didn't experience it in the same way. But that has changed people's frame around sustainability, and we've never seen really quite such a positive environment as we currently have. So that's a key message, is it's a very positive time. And I guess the other point, I mean, this is sort of a smaller point, but delighted to be here with you now. And I would say that we here in London feel way more connected to the rest of the world than we ever have done before. So a last little thought is, if you'd want to, come on board, then we will be delighted to speak to you by Zoom, and hopefully one day come and see New Zealand investors as well.
Listen, that's fantastic. Thanks very much, Ted. Been great to have a chat, and hopefully we'll get to see you at some stage in New Zealand.
I would love that. I really would. Great. Okay, thanks, Matt.
Thank you.